Remember SPACs? Erased from your memory that you might have lost money on them? Don't worry, there is a new bubble and you can lose even more money. A few years ago, the mania was on special purpose acquisition companies, or SPACs, also known as blank check companies that would create themselves and then go around and acquire or merge with a private company, list it on the market, and then that would be a great success. One very notorious company on Yahoo was Tattooed Chef. Well, the SPAC there really got spacked. The returns for investors are these. Yes, 100% down. There was the SPAC, then they found something to acquire, immediate boom, of course, and then there was a longer bust. We discussed this, and yes, it was possible it goes to 100, but I also told you that it is risky. The risks unfortunately materialized, and you have what you have. But when it comes to SPACs and other bubbles, that's not business-like behavior. The first point there is that you have to look what is the incentive when these guys make these acquisitions. So when the owners of the IPO get paid, and one of the most famous SPAC guys, Palipitia, said his company made roughly 750 million from the SPAC frenzy by taking hefty promote fees for taking companies public in SPAC mergers. So his incentive was just to have as many SPACs as possible, and that's already one big warning flag when it comes to investing. If someone is promoting, making a fee, stocks go up, everyone goes in like crazy. But just go back to Charlie, show me the incentive, and I will show you the outcome. It's always based on promises of growth, of something happening in the future. And a great lesson for investors is that you can engineer growth. Let me show you. So Tattooed Chef, just an example here, there were many similars. How they went about it. Private label vegetables, nothing, a boring business, but let's transform it into something cooler. And what's going on? Total addressable market. When you see this in a presentation, run away, because they are just showing you how big they can get, how big they can be, how much growth potential there is. Yes, 42 billion total addressable market in the US, the frozen market. Great. Then they say they have a durable competitive advantage. Okay, vertically integrated operations, great. That's just a story that anyone can discuss. But if you have a durable competitive advantage, that is shown with one factor. You can count the money, the dividends that are coming in no matter what. Without the cash, you also don't have a durable competitive advantage. Keep that in mind next time. Production, innovation, new categories, everything, refrigerated oat butter bars, like everyone's going to go crazy about that, but okay. This again, how you engineer growth. 4 retailers, 160 retailers, 4,000 locations to 14,000 locations, new products, 4x increase in manufacturing capacity. You say, whoa, look how it's growing all over the place. You can buy all of this. You can buy manufacturing capacity. They will sell it because there is manufacturing capacity. You can buy your places. You have to buy your place in Costco, Whole Foods, whatever. You have to buy that, you pay, you get it. But you need to have a lot of money. And so you can engineer growth. Great chart, it's growing fast. We're going to make big bucks, all right? Then if you look at the share of the market, their share of the market grew to 11%, not the total addressable market, but the Amy's, Cowley Power, Evil, Fat Rabbit, Garden, Garden Lights, Life Cuisine, Real Good Foods, and Sweet Earth. Never heard of those brands. So you can, again, even create your own market. You can engineer that growth, huge growth, and in a market that focuses on growth, you do well. However, you can engineer growth. You engineer growth so that something costs you $2 to make, you sell it for $1, that's something that's surely going to grow. And you can see here how they were growing. That's the 40% growth, stellar growth. And you can see how also the losses were doubling even faster than the growth. So they were clearly engineering the growth to please Wall Street. And the outlook was for great growth, just breaking even, and then with future targets, long-term targets, 20% gross margin with frozen food retailer. Yes, of course, 600 million annual sales. And you have all the stories there. You can pause it, read it. Everyone's plant-based side, blah, blah, blah. And that's the result. And many SPACs, we'll see later, the list went bankrupt like that, and that was the frenzy that was there in the past. And we have to remind ourselves of these to not incur in future frenzies. And as value investors, we get richer and richer by avoiding doing stupid things. Another factor is nobody talks about it now. Oh, nobody goes around, oh, I lost 100% on this, on 100% of this. Everyone talks about their winners, but WeWork, many other companies, there were some flying helicopters, I don't know, I've seen them all because I was getting 5 emails a day about, Sven, what about this SPAC or this SPAC? You can see here, when the money for SPACs was suddenly there, pension funds, everyone wanted in, then everything exploded there. But everyone lost there, most people lost there, but no worries. There is the next bubble, no? So what is the next bubble? Well, some of us have started telling people easily, like Goldman's Covello analyst, there is doubt behind the 16 trillion AI rally. Costs, limited uses means it won't revolutionize the world. And he says that it's dazzling how companies are investing and everything. Yes, it will be good, but it might not work as they are planning in the future. And when it comes to investing, you don't want to be the last sucker holding the bag for all those that traded Cisco in March of 2000 or that are trading Nvidia and the Microsoft, etc. now. Yes, great, but this is 30-40x now, and companies have pumped more than 150 billion in capital expenditures in the last 4 quarters, and language models and everything, but just contributed 7 percentage points to the 31% expansion of just Azure, also a multi-billion-dollar revenue run rate that can be 2 billion compared to the 600 for Amazon. So yes, some jobs will be more efficient, some jobs will be obsolete, but it has to happen. It has to happen fast. If not, the stock market tide might turn, and it isn't yet happening. There is just hype, hype, and hype. And then we have seen with the SPACs what happens if it doesn't happen. I remind you, value investing, we are here about risk and reward. Anything can happen, but there is also the risk side. And we have to weigh the reward and the risk. Everyone has invested so much. That means only one thing. There will be a lot of competition. Frozen foods, AI capacity, whatever. If there is competition, there is one rule in business: nobody makes any money. Thanks for watching, like and subscribe, see you in the next video.